This is George Masri, and you're listening to another episode of the Well Off Podcast, where today I interview Jared Henderson. Jared is an experienced investor. He's been in the game since 2012, started off in Niagara Falls, and later started investing in Peterborough and in Hamilton. And the interesting thing is that he actually lives in Montreal, Quebec. So he's investing from out of the province. He's created these systems. He's got his team in place, and he's able to do all of this while living several hours away by car. So it just goes to show that you don't have to necessarily be local. You don't have to invest in your own neck of the woods. You could always go abroad and make things work. And he's a perfect example of that. So we talked about how he was able to create a portfolio, to build a portfolio while living abroad. I'm going to say abroad, even though it's not that far away. And we talk about the 1% rule. We talk about why he doesn't invest in Montreal, a little bit about, we break down that market a little bit. And then we talk about finally some of the projects that he works on in Hamilton and Peterborough and how he makes that work. At the end of it, we discussed Building Stack, which is a tool for landlords. It's pretty much a software that allows you to have everything, all of your tools in one for as a landlord. You can market your properties, you can collect rents, you can communicate with your tenants without sharing your personal information. So it's all done on their platform. It's very useful for a landlord. If you're interested in finding out more about that, Jared includes his information, but it's basically jared@buildingstack.com. I just want to remind you guys that I always appreciate it when you share this. I know a lot of you guys have been sharing it with your friends and family. Be sure to let people know about this. Share the episode on the Apple Podcast platform, and please be sure to leave us a 5-star review so that we can continue to grow and continue to share a good message. Always appreciate it when you guys tune in, and I hope you'll enjoy the episode. Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I am speaking with Jared Henderson today, and Jared has been investing in real estate since 2012. He focuses on acquiring discounted properties and then transforms them into cash flowing income properties in growing markets outside of the GTA, Greater Toronto Area. And he also joined the Building Stack team recently. And for those that don't know, Building Stack is a property management software company headquartered in Montreal, Quebec. So Jared, welcome to the show. I'm happy to have you here.
Hey, thanks so much, George. Thanks for having me. This is great.
Great. So why don't you tell us a little bit about where you grew up and maybe one or two things you remember from your childhood?
So going back, born and raised in Montreal. I took a pit stop in Oakville, actually, when I was 6-7 years old. Family had business over there, and then straight back to Montreal. So born and raised here, man. Just to get back to the positive memories of my life, I loved the high school, elementary and high school. I went to LCC. Good times playing sports and growing up and making lifelong friends. And I seem to bounce to other places like Ottawa and Sherbrooke, Quebec, but I always end up back in Montreal. So happy to be back here 100%.
Awesome. Yeah, I have a lot of friends that ended up going to Montreal either short term or for a couple years, and some have moved from since. But it's an awesome place. I've been a couple times. I've got some family out there too. So I guess the next part here is to ask you a little bit about your journey. I'm wondering, like I'm sure a lot of people, why is it that you invest in the GTA as opposed to in your own hometown?
Appreciation, straight, simple appreciation. But of course I can dig into that a bit. So I started investing in condos in Niagara Falls in 2012. So before knowing what I was doing, I bought 2 condos because property management companies said, hey, look, we'll rent them out. We've already got tenants here, so the rents are already taken care of, and you just have to sit back and collect property management statements. And since my biggest fear was buying an investment property and it being vacant, I was all about that. So that's how I started. And what happened is, after committing to Niagara Falls, I checked out the other markets like Hamilton, St. Catharines, and started educating myself as to what fundamentals were causing prices to increase in the area. Became fascinated with, and you started obsessing with it and educating yourself through books, podcasts, and networking, and really diving into the full golden horseshoe development. So it's definitely been a journey. I don't just say that. The word journey and mindset are being passed around all the time, but it was a journey because I started out in Niagara Falls, then it took me to St. Catharines, Hamilton, and ended up in Peterborough.
Yeah. So I know you talked about appreciation in Montreal, and I can understand that probably like in the last 15 years, let's say aside from the last maybe 3 or 4, there hasn't been too much appreciation, but I know prices have increased quite a bit in Montreal lately. Why do you think that Montreal as a market hasn't really caught up to Toronto or been as successful in terms of the price appreciation?
We have political issues here. That's number one. Businesses are a bit more fearful of moving here and developing. That's less a concern the last few years with, let's call it, less political uncertainty. But besides that, the population growth in Toronto, I can't quote you any numbers. I just know that it's double or far greater the population growth of Montreal, as well as higher incomes are made in Toronto. So as a direct comparison, the reason why Montreal is sort of catching up is we recently started to get much higher incomes. Okay, and when the incomes increase, rental amounts go up, and then property values are there to follow. So it's definitely a domino effect. And you're right. The last 3 years in Montreal have been fantastic growth, and it is a very strong market. I do invest here, but I still concentrate. I am continuing to concentrate in Peterborough and Hamilton, and the markets that I'm comfortable with, that I understand well, and where I've developed teams. Right, so that kind of support is necessary for growth.
Yeah. One of the things that I heard from a friend of mine in Montreal, for the reason as to why there hasn't been as much appreciation, is partly because everything is in French in Montreal. So all contracts and everything have to be signed in French. And I think, according to her, she's a lawyer, she said that might be driving certain people away. Would you agree with that? Or is that maybe not realistic?
I think it's a very small part of the reason, but I think it has an impact, but likely not it's not 100%. It doesn't tell 100% of the story, right? I think there's a few different factors that contribute to it. Rents here are starting to pick up, right? We used to have the 1% rule, or try to attain that. I mean, I first learned that through listening to podcasts in the US, and we used to probably used to get it in outside Toronto. And now, since it's becoming more challenging, one of the things that's preventing me from really taking Montreal by storm is the rents haven't caught up to property values. So you know how they always lag. Well, they're lagging at such a large gap that I can't make sense of the purchase price. So I simply just don't buy, and I buy in markets that make sense to me, because I don't believe that I should suffer negative cash flow with the anticipation of appreciation when I can have both in the markets that I'm currently in. So I know it's kind of funny. I always get the question, Jade, you're in Montreal, but you invest in Peterborough. First of all, where is Peterborough? Second of all, why are you doing it? It makes sense if you take a look back, and at the prices that I bought in 2017, as well as the significant increase in rents we've seen there, I can still cash flow there, right? And I think that's the important fundamental to start out with as an investor. Cash flow first, and the appreciation is something that you don't really have much control over.
Yeah. And can you, just in case someone's listening and they don't really know what the 1% rule is, can you just briefly explain that?
Sure. So 1% rule means that the monthly revenue that you're generating, the rent on a property, would be equivalent to 1% of the purchase price. So a good example would be what I did in Peterborough in 2017. I'm buying a bungalow for approximately $300,000. And in return, as a student rental, I would get 6 bedrooms for $500 each per month. Therefore, generating $3,000 per month. Divide 3,000 into 300. You've got your 1% rule. Anything in excess of that is great cash flow, one would consider at normal interest rates. And the reason why people can get away with it now without hitting that 1% rule is that we've got, sub 2% interest rates, which, helps your cash flow, right? In addition to half the mortgage being going into your savings account and principal pay down, we have lower mortgage payments. So this all wouldn't work at the level of appreciation that we're seeing without lower interest rates.
Yeah. And to go back to the Montreal market in general, from what I've heard, I'm not an expert obviously on the Montreal market, but I believe that rent policies are very difficult for landlords in Montreal because from my understanding, there's a cap to how much you can raise rents. But the difference between Ontario and Quebec is that in Quebec, when you have a turnover, you can't increase it to market rent. You have to go by what the previous rent was and increase it by the allowable guideline. Is that correct?
I will admit that I'm not the expert in Quebec, but I have heard that where I believe you are able to increase it to market rent if there's a full turnover, but there is some contingency factor that what you're suggesting is correct. So there is a middle ground that I'm unclear on, but in short, it's similar to Ontario in that if there is turnover, you can increase it to market rent, and we're limited by whatever it is, 1.5% or 2 point whatever percent per year based on the provincial mandate on rent increases. So very strict, very tenant friendly, and there are positive attributes to that. But like I said, the reason that I haven't taken the full dive here is that perhaps I haven't found the right market, right, where the cash flow makes sense.
Sure.
And that's kept me concentrating in Peterborough and Hamilton.
Yeah, that makes sense. So what are some of your goals now, and how are you able to manage investing outside of your province and be successful?
So my goals are twofold. Number one is to keep BRRRing houses in Peterborough, and number two, to continue buying multi-units in Hamilton. I work with a partner who chooses to remain silent for obvious reasons in Hamilton, where we're working on several projects with money partners, and we buy off-market deals, rehab, re-rent, refinance, and buy the next one. So just doing what I'm doing with single-family homes, and just on a larger scale. And in Peterborough, the BRRRR process is the main way I generate the growth. I started out with student rentals there. As you know, with student rentals, sometimes there are limitations on refinancing. And so since the market's appreciated well in the last couple of years, I'm now converting all the student rentals into duplexes, right? So I buy raised bungalows. I produce a second unit downstairs, 100% legal, to code with the city. We refinance, and I'm there buying the next one. So it's basically just scaling out that way.
Yeah. And that's awesome that you're able to do it. So the second part of the question was, how are you doing it successfully? And I'm wondering, like, how are you managing these renovations and doing all that while you're in Montreal?
I just asked them to send me pictures, and we're okay.
Really?
Yeah.
Do you ever do you come down?
No, not anymore.
Really?
No, I'm half joking. But like I said, I'm only half joking in the sense that you can actually do a lot remotely.
Yeah.
The key is to build teams that you trust. So this has been a process. I didn't wake up yesterday and say, I'm going to buy 10 houses in Peterborough and just, pick a contractor from the phone book and a property manager from a referral and build it out that way. No, I started a few years back with student rentals and started developing teams, so strong realtors. I've also done flyers for to access off-market deals. I've dealt with a few different property managers, a few different contractors. I am at the point right now where I can identify a property a property manager, and a contractor. And right there, you have your own little business, right? So my strength is acquiring either off market or under market priced homes that fit the bill for either a student rental or a second suite. And I can identify who's going to take the project from 3 beds and put in three additional bedrooms based on the layout, extra washrooms, and just maximize the utility of that property in order to generate the maximum cash flow.
Yeah, it's awesome that you're able to do all that. And it seems like you've created the system, and every single time you're doing the same thing with these properties. So you identify exactly what you're looking for. You know the prices because you're active in the market. And then when you find it, you grab it, you do the same thing to it, the renovations, fill it, and then move on to the next project.
Yeah, it's not as though I don't get excited about these projects anymore. It's that if you know your cookie cutter process, it's your responsibility to buy that next property and execute, right? Because deals are, as you know, becoming tougher and tougher to come by. So where I also have a strategic advantage is that I make aggressive offers on properties that do fit the bill, because I often find that many investors or potential home buyers might be a bit too conservative when it comes to either an inspection. Most things can be solved with a bit of money, depending on the issues that they have. Like, there's plenty of houses that don't fit the bill for people, whether they don't look right, they don't smell right, they don't have enough bedrooms, or they seem too small, and they don't have the vision to maximize the square footage and understand that usually $10,000 or $20,000 in cosmetic upgrades can get you a big lift in look and appeal and tenant profile. So that's what I like to focus on.
Yeah, absolutely. Can you tell us a bit of what you're looking for? Like, let's say you're looking in Hamilton. Are you looking for, when you say multi, are you talking about like 3 units, or are you talking about 7 units? What's the typical project like for you?
I'm looking for 6 and up to get commercial financing.
Okay.
And similar process as Peterborough. It is essentially a BRRRR, right? Where we're looking through tenant turnover to increase rents, increase the value, and then refinance the property and buy more.
Yeah.
And this is a bit of a new venture for me. It's only been a year, but I do get the process. I've networked with many people who are very successful at it, and it's more in line with my mindset, as some people say, in that I'm just a math guy. And so if the numbers make sense, then you can take that objective approach. Often people get too emotional with properties, think about reasons why they shouldn't do it. With what we've seen in Hamilton, I think it's been 8% year over year rent increases for the last, 10 or 15 years. So what else do you need to know? It's a growing market. It's next to Burlington, which is much more expensive. It's close to Toronto. It's hyper gentrifying. And when you have a deal, you pick it up and run with it and make it work. There's no gifts being handed out.
Yeah, absolutely. Yeah.
Or if you know anyone who's giving them, please put them in touch with me, and I promise I'll buy.
Yeah. So these 6+ unit properties that you're looking at, are you getting them vacant typically, or it doesn't matter to you? Like, you'll assume the tenants and do the work anyway? Sometimes
we'll get a unit or 2 vacant, and we'll put that as a condition in the purchase and sale agreement. And often it's the case where, I'm working with property managers that don't mind having the conversation with the tenants of finding alternative places to stay if we can find a win-win solution, right? Often there's other similarly priced apartments in the nearby area, and we'll have discussions with the tenants, and to be honest, incentivize them to move somewhere else.
Mm-hmm. Yeah, that's fair. Yeah. Obviously you're doing amazing things. You seem to be very knowledgeable of the market, especially being from Montreal. Um, I know the second part of this thing here is building stack. I know that's something that you've recently joined the team there. I just wanted you to share a little bit about building stack and how it's helping you and helping other property owners.
Yeah, so it's funny. I actually met Jonathan Morgel about 5 or 6 years ago at some networking thing in Westmount here in Montreal, and he told me about the business. And I was always very curious because being passionate about real estate and understanding how a software can basically just synergize your operation and allow you to scale much faster than a paper-based way of managing your properties. It was always of curiosity to me. And so we reconnected recently, and the opportunity came up to join the team. And I've been really excited to promote it to everyone I know. All my property managers use it now. They were using it before I joined the team because they heard about the software and how it helps on the marketing end, communication. So it essentially helps companies market vacancies well in advance, manages all their properties and buildings and tenants, and provides a centralized hub of communication instead of, for example, on the marketing end, to create one ad several different times and publish it on several different sites. We've got a function that automates that, where you can just virtually create it once, and our system pumps it out to several of the most popular websites for rentals. And on the communication end, we have a portal where the owners, our employees, and the tenants can all communicate on a centralized hub. So let's say the toilet's leaking, and there's the tenant needs to communicate with the landlord. They can do it online. It's all time-stamped, recorded, and acted on very quickly in a centralized way. Because what happens is that many investors, and I'm one of them, they start out with one property, they get to 5, they get to 10. Pretty soon you're going to start wanting some privacy. For those who are managing their places on their own, they don't necessarily want the tenants calling them. They don't want their personal emails or texts or calls late at night. And in order to keep that arm's length, it's important to have, a centralized way of managing your properties. And Building Stack provides just that. So there's nothing better than promoting something you believe in, right? And that's what I get to do every day.
Yeah, for sure. I definitely agree with separating your email and your personal phone number from your tenants. I remember, like, the first property I had, the tenants had my phone number, but ever since then, nobody's got my cell number. I don't want to get calls at 10 at night or 9:30 at night from a tenant. So I definitely agree with you on that. So that's great. And Building Stack, is it more geared towards property managers because you're talking about a lot about the advertising aspect and that type of thing? Or is it also something that's useful to that individual landlord that might have 1 or 2 properties?
So for the individual landlord that has 1 or 2 properties, it is of some use, but it's not an ideal fit in that. What we're geared for is managing a portfolio of properties.
Right.
So it's as though you're outgrowing your operations when you're 10, 20, 30 units, and you're using Excel and Google Docs, and you're using your personal Gmail, right? So what we're focusing on is basically 10 units and up. From there, your listeners can sign up for free and access free OPP online rent payments. And if any of them want to connect with me and get a demo and understand what we have to offer, please reach out. My work email now is jared@buildingstack.com. You can also reach out to me on Instagram at jaredh55. Be happy to chat about it, show you what we have. But to answer your question, can someone who owns a couple properties use it? Yes, but it's an ideal fit for those that are approaching 10 units or more.
Mm-hmm. Got it. Okay, perfect. Yeah, so just to kind of recap, Building Stack allows you to kind of amalgamate all of the marketing into one space so that it blasts it out to the different platforms. And then it allows the tenants and the landlord to communicate on the building stack platform as well, so that you're not giving away your personal email and phone number. And finally, it allows you to collect rent from your tenants through methods like pre-authorized debit and potentially a few other ones, basically for free. If you meet the qualifications, building stacks qualifications. Is that a good
we're
summary?
able to do it through excellent summary. The 3 payment options are credit card, debit, and bank. And bank is the most affordable. Owners can set it up so they take on a small fee themselves, and the tenants actually don't pay anything at all. And it's just a great way to log into your account, see who's paid, see who hasn't. You don't have to memorize any passwords for those who are sending money, or worry about online transfers from one account to the next. Okay, so my position as an owner is I'm communicating with my property managers, and they're I'm able to see through the owner portal what's going on with all my properties in different areas. So it gives me a great overview of what's going on in my portfolio.
Yeah, there you go. Perfect. So is there anything else you would like to cover before we move on to the next section?
No, all good. Ready to go.
Perfect. So I'm going to ask you 5 random questions. This is the random 5, and you just tell me the first thing that comes to mind.
Okay.
Okay. Number 1, what are you interested in that most people aren't?
What am I interested in that most people aren't? Vacancy rates in different areas of random towns in Ontario. I am a numbers guy, so I like to geek out on the numbers, understand rent increases, vacancy rate, migration, all these factors that contribute to real estate metrics.
Awesome. That's what makes you a good investor.
Don't make me say that again.
All right. Number 2, what smartphone feature would you actually be excited for to be implemented?
Smartphone feature. So like I get to create an app right now?
A feature, or I guess an app for your smartphone that you'd be excited to be implemented.
To be implemented. Okay. So, wow. I go on about Waze. It's my favorite. I mean, I don't know how I survived without it before, because, I decide when and where I want to speed, which way to go.
Yeah.
Geez. That's a tough one. Can we come right back to that one?
Well, how about I answer it? Yeah. I'm going to answer it on your behalf.
Sure.
I'm an iPhone user. I would like to have scheduled text messages. I hate that I can't do that.
Schedule. Okay, so you get to like pre-schedule outgoing text that you're going to send?
Yes, exactly.
Okay.
Yeah, that would be my request there for that.
Right, because you have an idea at a certain period of time, but you don't want to send it right now. You want to send it at 10:30 a.m. to this person.
Or if you need to remind somebody of something, you could just pre-schedule that reminder and send it out, right? Something like that.
Right.
Yeah.
Oh, I've got a good one. And this is going to be very advanced for all my appliances or any major part of my property that requires preventative maintenance. I want push notifications on those. I don't even want a property manager. I want a robot to push a button to me, say, hey, Jared, have this inspected so that you don't pay 3 times as much in a month from now. Get it done now.
Yeah, that'd be awesome. Yeah. Okay, so number 3, what's the funniest comedy skit you've seen?
Oh, there's way too many. I mean, I can go back to, you're making me think of Will Ferrell or Kids in the Hall.
Okay.
I'm a big Will Ferrell, Bruce McCullough fan, so almost anything they've ever done. Geez. And I have to name a specific sketch?
It doesn't matter. These are just random questions, so I think your answer will work.
Yeah, well, there was there's something that's coming to mind right now. There is is it Tom Foley from Kids in the Hall? He's got a sketch where he's talking about he's threatening the whole town that he'll let the monkeys loose. And we're going back 30 years, so I know I'm going to date myself, but he has a funny line in it where he claims that he used to live in Bobby Orr's house. It made you feel very Canadian. So
Yeah.
I'll share it with your listeners after if they're interested. It's one of the funniest things I've ever seen.
Cool. Yeah, they could reach out to you on Instagram, and I'm sure you'll share it with them there.
Nice.
Number 4, what's the most ridiculous thing you've ever bought?
Oh, ridiculous. Jeez, I have to go back to a younger age. I'm way too practical now. I go through a whole decision-making process with almost everything right now. Oh, most ridiculous thing I ever bought. I'm going to come back to that.
Okay. Number 5, what was the best thing that happened to you today?
The best thing that happened to me today. Well, it's my fiance's birthday, so I love you, Joe. I'm happy we're together celebrating at a nice dinner tonight. So the best thing that happened to me today is I woke up next to my fiance and
awesome,
and just get to enjoy a day with her.
Yeah, that's great. The funny thing is, as I reviewed the questions, I thought of the exact same thing with my wife. That's what I would have answered. That's how I would have answered that question. So there you go. Yeah. So do you want to go back to number 4? I know it might be a little bit challenging. What's the most ridiculous thing you've ever bought? It could be anything. Just tell me something ridiculous. Doesn't have to be the most ridiculous.
Oh, what did I buy?
Maybe some clothing you got at some point. You tried a certain style.
Oh, yeah. I'm sorry. I'm pulling a blank on this.
No,
but I'm not shy about it. Just I can't think of anything that sticks out. So
yeah. Well, I bought shorts once when I was in high school that looked like a kitchen towel. So that's what people were telling me. I was dressed like a kitchen towel. So
nice. I mean, you go back and you see the styles that were popular back then. I joke about it with my girl. Everyone's wearing super tight clothing right now, and I was a bit of a skateboarder back in the day, going back to my teens. So, I mean, in terms of ridiculous things I buy, those big baggy jeans. There was a stupid fad where you would have a chain attached to your wallet, attached to your belt buckle.
Yeah.
I went through a little bit of that. It's almost the characters you were instead of the things you bought that are funnier.
I don't know about you guys, but when I was in high school, there was a thing where the skater guys were wearing women's jeans. I don't know why.
That's nice. I don't know. I don't get that.
Okay.
Women's jeans. And what was the stick? Was it a joke?
No, it was skinny jeans, but I guess the skinny jeans for men weren't skinny enough, so they were wearing women's jeans.
Oh boy. Wow.
Anyway, that's that.
Yeah.
So, I think that's it. So do you want to just tell people how they can reach you? I know you already covered it, and what services you provide.
Yeah, the stupidest thing I've also bought before, just these expensive sunglasses. They're either broken or stolen or lost.
Yeah. 3
months after I buy them. Remind me never to spend over $150 on a pair of sunglasses.
Yeah.
That's dumb.
Okay.
And at least the phones are free once they get you on a contract, right? But these sunglasses, never again.
Okay.
Sorry, I cut you off there.
Yeah, no worries. So Jared at buildingstack.com, and what services do you provide?
Yeah, so we provide marketing and communication for any company that's interested in integrating a full service software for their real estate company, also accepting online payments. And we walk the tenant through the whole journey so that the marketing is attracting the tenant. Once they're in, we're connecting them with the leasing manager. We can also go through credit checks straight on our software. So it takes the whole onboarding process from the beginning to the end. And then communication is the last factor, where we're able to communicate between owners, employees, and tenants in real time, time-stamped, and just have a centralized form of communication so that everyone's on the same page, nothing's disjointed and fragmented. And Fantastic opportunity to just show anyone, whoever's interested, just reach out to me. Don't hesitate.
Awesome. Jared, thank you very much. It was great having you on, and I look forward to talking with you again soon.
Awesome. Thanks, George. Don't buy any expensive sunglasses in the meantime.
All right. Sounds good. Take care.
Okay. Bye.
As always, thank you for listening. I hope you enjoyed the content. And if you did, I ask you to share this with a friend, with a family member, somebody who might benefit. And it's always appreciated if you can leave us a review, especially if you're listening to it on the Apple Podcasts app, or if you're on YouTube, give us a like, subscribe, comment, and your support is always appreciated. Thank you very much.